David Mann is the director of research at Standard Chartered Bank. He says we're living in the most anemic recovery since World War II and sees the most opportunity coming out of Asia. Axel Merk is founder of Merk Investments, joining us from Mountain View, California. He's remained bullish on the euro despite the debt situation. Finally, Dolan is the chief currency strategist at Gain Capital. He co-wrote Currency Trading for Dummies, and the second edition is due out later this month. Gentlemen, welcome to Street Smart. Thank you so much for joining us. David, I'll start with you. What do you make of the confidence vote tonight? How important is this to the global recovery?
Well, I think it's very important that we do see this confidence vote going through. We do think it makes sense that it will happen, and that's what we're seeing being priced in, certainly as far as the recent moves in the euros go. But will it actually make all the difference to the recovery? Not necessarily. As you mentioned earlier, what's going on in the US is still a major issue. There's still some major confidence damage that could be done if what's happening in Greece, the worries about that spread around the rest of Europe. So I don't think we're out of the woods yet by any means.
Axel, you know what? I've been thinking all week, and I was telling people yesterday, I bought a car in Germany when a euro was 82 cents. Now we're looking at $1.40 and change. How can the euro be so strong when there's so much concern over the collapse, really, of the EMU?
Well, it's precisely because they're not spending and printing as much money as we do in the U.S. Remember Ben Bernanke talking about, even testifying, that going off the gold standard during the Great Depression has helped the U.S. recover from the Great Depression faster than other countries. What people don't realize is somebody is at the other side of that trade. Nowadays, the Fed is trying to debase the dollar. In Europe, you have the opposite. You have lousy growth, you have a lot of pain, but you have it on the backdrop of a strong currency. You don't need to have economic growth to have a strong currency, as Japan has shown. You need that only when you have a current account deficit like the U.S. Europe is kind of in the middle, and you can have these spreads blow out, have these bonds be very weak, yet the core of the Eurozone does great. Exports are booming in Germany, and the euro is strengthening on the backdrop of all of this.
Brian, what do you think about the euro and the situation in Greece? I mean, it's obviously very important, the vote tonight. How could it affect the trading in the euro?
Well, I think we've already seeing a bit of a relief rally in the euro as the prospects for passage look pretty good. So I think once the vote of confidence is passed, I think you're likely to see a further move higher in the euro. Not particularly, I'm not expecting to see much past 145. The real picture, though, is we might be looking at a Wile E. Coyote moment here where markets have gotten all bulled up on the prospects of a Greek resolution. But going back to the weaker growth picture, that's the reality that next awaits the global economy, and that does not look good, and that suggests that the longer-term debt problem for Europe is going to persist. So I would not be surprised to see the euro fail after a final relief rally.
Axel, what do you think about that? Could the euro fail here? And, you know, even beyond that, because I'm sure Brian doesn't mean really fail, could the euro really fail? Because a lot of people are saying Greece is just going to kick the can further down the road. They just can't do what the Germans need them to do. They can't be in the same union together.
Well, Greece may fail, but the euro won't fail. And it's really in Greece's own hands. We have a process here. There's no silver bullet. Tonight's vote is one step on a long road. And yes, many things can go wrong. But the process we see play out is exactly what we need. It's the bond market dictating the terms. The language of the bond market is the only one policymakers understand. That's why the pressure needs to remain on. Imagine all this amazing reform that's been implemented in Portugal, in Spain, in Greece. Without the bond market's encouragement, that wouldn't happen. So it's an urgently necessary process. And yes, policymakers hate it, but it is a process that is very helpful. And ultimately, yes, there will always be issues, but the issues will be in the bond market. The euro itself can thrive in this. And I agree that economic growth may be lackluster, but that is going to hurt the US dollar more than the euro.
Clearly, David, we're all over the place here. What has to happen? What's your prescription for solving the problems that seem to continue to plague the European Monetary Union?
Well, I think it's a very simple one. Unfortunately, it's an incredibly painful one. And I think this is a key point about what we've all been discussing here today, which is for a successful monetary union, there's going to be gain and there's going to be pain associated with that. And we're now in that part of pain. In particular, you need to end up seeing fiscal transfers and across the Eurozone as a whole, which is incredibly difficult to achieve. We're getting there slowly. In theory, it could even happen through the back door via the ECB ending up needing to be recapitalized after we see a major haircut out of Greece. But we will need to ultimately see Greece having to default on some of its debt. I think you look at the numbers, even after the packages that come, talking about kicking the can down the road, eventually the can will start to break, and you have to do something about it. We need to face up to this, and Greece will have to go through a painful period, and that still will be better than being outside the Eurozone, having been kicked out or left, and then having to suffer from similar problems, for example, that Argentina has, where it still hasn't fully resolved all of its default from more than 10 years ago.
Brian, will we ever come to the end of problems in the Eurozone? I mean, what's your prescription to fix the euro here?
That's the hard answer, Matt. I don't really see one because growth is as stalling as we speak, and the prospects forward, certainly on the periphery, are quite bleak indeed. We're talking about 15 to 20% unemployment between Spain and Greece. I'm not sure where the growth is going to come from there, and so I'm expecting additional failure in terms of meeting deficit reduction targets. So this is just going to drag on for many years. People talk about the U.S. being in the midst of a lost decade. I think the Eurozone is very quickly approaching a similar fate, and I just don't see the ECB or the governments there in any position to really stimulate and rejuvenate this recovery.
Axel, you have faith in the common currency, but obviously there are big problems here. What needs to be done? What's your prescription to fix the issues ailing the EU?
Well, we need more transparency foremost. A default of Greece is going to happen, but it's not in Greece's interest for that to happen now. They need to adjust their primary deficit so they can absorb the shock. So as long as the easy money comes from the rest of the Eurozone and the IMF, they should take it. At some point, they'll default. But what we ultimately need is we need to start working with market forces again. We can't just ruling by threat all the time that something is going to unravel. And by the way, there is not going to be a Lehman moment as people fear about, because we know the playbook of the central banks. Central banks can keep a zombie banking system alive. Yes, we need to recapitalize some of these banks, but what we need to do is we need to force the banks to come clean, to have stress tests that are good and valid, and then tackle the issues. We're not going to fix the countries easily, but we can fix the financial system, and with that we can allow then the countries to fail if that's what they wish and if they wanted to bear the consequences of those actions.
Just a minute left. Let me get each of your forecast for the euro. Where do you see the euro trading here, David, at the end of the year?
End of the year, we think we're going to be down in the low to mid 130s in euro dollar, and the better opportunities are going to be in a lot of the markets over in Asia, particularly Indonesia or Korea, Malaysia will be doing better, and even the Australian dollar, on the assumption that we don't have a hard landing in China, which we don't have as a core scenario.
Brian, your forecast for the euro at the end of the year?
First off, Matt, I just wanted to say I'm not saying that the euro is going to fail or fall apart. I meant a technical failure after this relief rally.
No, so, of course. That's yes.
Okay, you clued in. Ultimately, I'm looking for the euro back down into about the 135, 137 as well by the end of the year.
Axel? Euro
we agree
forecast?
that there are many opportunities in the rest of the world. What we like about the euro is that everybody hates it these days. We think there's substantial upside, and I'm not going to give you a price target, but the range of the 140s, I think, can easily be exceeded.
Well, and you've been right on so far. Axel, thanks so much for joining us. David, Mann, appreciate you coming to us in the studio here. And Brian Dolan of Gain Capital, always a pleasure to talk with you.